Hey guys, welcome back to Be Rich. Before we get into the video, I wanted to bring to your notice that my uncles VinodSrinivasan, Anand Srinivasan and I have rolled out our Substack, which is basically a blog / newsletter where we're going to post our original research onto it. And we've analyzed macroeconomic trends. And a lot of you know my uncle Anand Srinivasan and I regularly write for The Hindu, and these articles are also going to be made available for you in the Substack. The link is moatinvesting.substack.com. You'll find it in the description and in the video right now. We hope you go check it out. We've put a lot of time and effort into it. And please give us comments and feedback on what you read. Thank you. Hey guys, welcome back to Be Rich. Today we're going to be discussing top 5 reasons why gold should be a part of your investment portfolio. So, a lot of us have been looking at gold as an investment, and it always has been an avenue which not only us, but our parents, our grandparents, our great-grandparents, and so on and so forth, have been buying, holding, and passing on to the next generation. This is a generational asset which has deep roots with our Indian community, especially, but across the world, we do see that most communities value gold. So, when this rock or this metal has been given such an importance in our society, the question then becomes, why should we today, as modern citizens of a global economy, consider holding this sort of ancient artifact of an investment in our portfolio? And we're all well aware of Uncle Warren Buffett saying that, look, gold is an unproductive asset. I would personally never hold gold. That's what Warren Buffett had said. But still, the intelligent investor, and that is Benjamin Graham, who's Warren Buffett's guru, has still said that holding gold is not that bad of an idea. And even Jason Zweig said that for an intelligent investor, having about 5% or 10% of your portfolio in gold doesn't seem to be that bad of an idea. So let's examine some reasons why. First of all, gold is a hedge against inflation. So what does a hedge against inflation mean? First of all, let's understand what the effects of inflation is. Inflation is something that erodes the value of your notes, that is money, over time. And it doesn't need to just be hard notes. It may also be in terms of your bank account, because it's probable that your bank account interest rate is probably much lower than the inflation rate. So the inflation rate is taking away, say, 5 or 6% or 7% of your bank account money's value per year. And your bank account is only adding about 3 or 4 or 5% of that money back to you. So you are not made whole. You are losing more than you are gaining. So imagine someone is pouring water into your cup, but your cup has a bigger hole due to which you're losing more water than the amount of water that's being poured in. Okay, this is the first point of inflation. So how does gold help us? Gold helps us because gold is almost a commodity / investment. So this, when you look at a hard asset, its price keeps track of inflation, because the more money there is in the economy, more people are willing to buy gold, because the supply of gold does not go up with the supply of money. The supply of gold is sort of unlinked to the supply of money. So today, if my uncle is the supplier of gold, let's say he's a gold mining company or represents gold mining companies, and I am the Federal Reserve or I am the RBI, and today I decide to print 10,000 rupees, and he still supplies 1 gram of gold per day. That means even if I supply 20,000 rupees today, 30,000 rupees, 40,000 rupees today, the 1 gram of gold is still going to be 1 gram of gold. And if I give this 40,000 rupees to people in the market, they are going to spend more of this 40,000 rupees to buy that 1 gram of gold. And that means the price of that 1 gram of gold will naturally tick upwards. Similarly, instead, if I gave you a 10,000 rupee note and said, okay, keep it, I'm going to print more. And I keep printing, and everyone else has 10 lakh rupees when you still have that 10,000 rupee deposit in your account, you are naturally poorer than what you were before, because your money has not increased, whereas everyone else's money has increased relative to you. So this is why gold prevents the effects of inflation from being as vicious as it can be. This is the first reason. Do you have anything to add on that?
I agree with what you said, 100%. And I agree with what Benjamin Graham says and what Jason Zweig says, and I disagree with Warren Buffett. I'll tell you why I disagree. Copying Warren Buffett's investment style works for him. It's like watching Rock Dwayne Johnson's Instagram feed, and you see his cheat meals in Saturdays and Sundays when he's having those stacks of pancakes and he's having like a shot of tequila. He can afford to do that, considering all the physical exercise he puts his body through. If we, being a normal person, looks at that and feels inspired, I deserve to do this to myself also every weekend. I should consume like what Rock consumes. Whatever little exercise I'm doing will go out the window, and so will my diet plan and my weight loss plan. So the same thing is true for Warren. Because his investment strategy is when he's sitting in a certain amount of capital, his lifestyle, his mental makeup is such that he doesn't need it, because the way his relationship with money is very different than our relationship with money. So, yes, it is brilliant that he says that, and there is truth in what he says. But when you look at it as every normal individual, as a normal person, then I would rather be following Benjamin Graham when it comes to gold, and definitely have minimum 5% of your portfolio in gold, because it gives you a sense of security. When you see markets swaying either way, up or down, something to ground you to realize, okay, this is actual wealth, this is what it is. Because gold is like a true barometer and tells you the pressure of the atmosphere at that point of time, instead of trying to be a forecaster of telling you if it's going to rain today or not. Because that's what gold will tell you. It will tell you where you're standing right now, where the world economy is standing, where everything is standing in terms of wealth. And that is important to have. And like you rightly said, all other things are very true. It prevents erosion of your purchasing power. It preserves that like nothing else preserves, like the way gold preserves. And any of you can take this up, like what Shashwat said, and calculate. Just 5 years ago, if I was buying 1 gram of gold, how much of rupees I would have spent. Now the same amount of gold, to purchase the same amount of gold, how many rupees you'll be spending today? And if you see, you'll be shocked for the amount of multiples it's gone up by. That is how much our currency has eroded. And this is true with any currency you take globally, because no currency in the world is pegged with gold anymore. As soon as Nixon released it, everybody followed suit and released it, because there's no choice. If one central bank decides not to follow it, everybody has to follow that, especially when it's a reserve currency itself. They decide to print how much ever they want, whenever they want. Then we have no choice but to comply. Otherwise, you will take a beating in the economy. So I agree with what you're saying.
So that transitions very smoothly into the second point, why gold makes sense to own. That is, gold performs well during recessions. So some of you may be wondering, what is inherently making this asset perform well during a recession? Does it have some behavior pattern, or is it because the market decides to suddenly value gold more? Well, let me try to break it down for those at home. So gold performs better generally during recessions because people want to move to risk-free assets. So when people want to move to risk-free assets, generally 3 assets come in mind. One, cold hard cash. This is the one big part which most people are willing to hold during a recession, which is just cold hard green dollars, or even in India, we have a greenish gray 500 rupee note. So most of us feel comfortable holding this during a recession. Worst case, I get laid off from my job. I still have this money to go take and buy whatever groceries I need to buy. Valid reasoning. Second asset, treasuries or bonds. The reason why most people feel comfortable holding treasuries or bonds during a recession is because the income is fixed. I'm going to get this 10% on my bond regardless of whether there is a recession or there is a boom. Why does that matter? Because your purchasing power is still retained to a large extent because you have something padding it up. With stocks, your purchasing power is not padded much by stocks because your dividend yield is not going to give you much of your returns. Most of your returns comes from capital appreciation. So when most of your money is coming from capital appreciation and the market is not doing so well, generally that means that your purchasing power does come down. So that's the second thing as to why people like to hold bonds. Third place where people like to go is gold. And why people like to go to gold is because gold is seen as the one hard asset which you can hold and which you can have in tangible amounts. And this is an asset which is seen and viewed widely as a substitute to currency. Although it's not a currency, let's be clear on that. Gold is not a currency, it's a metal. However, this metal is viewed as a paramount importance when it comes to being able to trade with your currency. If you want to take gold and exchange it for money, anyone would be happy to give you that money in exchange for the gold which you're pledging. So this is why gold is seen as recession proof, and there is data to back up the fact that gold performs well during recessions. So if you look at the dot-com bubble, gold went up by 16% when the S&P 500 went down by 47%. During the 2007 to 9 great financial crisis, when S&P 500 went down by 55%, gold went up by 21%. And in 2018, when there were market tremors, when the S&P 500 cracked by 19%, gold went up by 6%. There's another reason why this happens. Another reason is the fact that when there are recessions, interest rates drop. And when interest rates drop, we basically see that gold value goes up. And when interest rates climb, gold value goes down. This is because when interest rates drop, that means that treasuries are not so attractive to stay inside. So people are willing to shift to gold. And when interest rates go up, people are pivoting from gold to treasuries because now treasuries are giving a higher return. This makes sense. So this is the second rationale. Do you have anything to say on this one?
No, I just want to add one thing, which is completely off this track, which a lot of you would be thinking because young people are watching this, is there's a big difference between this and crypto. Crypto is not gold.
Yeah.
And gold is not crypto. Yes, in one aspect they are the same. Inherently, you cannot do anything with gold. You cannot eat gold, build anything with gold. You really cannot do it. It's a soft metal and it has really no use other than our allure to it. And this is true with crypto too. And the main difference between these two is gold is built into our DNA. It's like if you ask majority of the human beings on this planet, I would say around 80% to 70% believe in some form of higher power. So gold has that kind of a hold on human mind and human consciousness, which crypto doesn't have. That is why gold is much safer. That is why we talk about gold, and it's a physical asset which you actually can hold in your hand, which you can take and carry. So a lot of you might think, why are we not talking about crypto? This is the main reason. I just wanted to plug that in if you are thinking about it.
And let's be clear, central banks around the world also hold gold.
Yes.
So this is...
They don't clean on holding crypto.
Bitcoin or any other cryptocurrency. So that's another reason. So the third reason why gold makes sense for an investor, an intelligent investor, is that gold is easy to understand. Let's be simple about it. Let's be frank. Gold is an easy thing to understand. If most of us who are entering investing for the first time or don't have enough time to become a professional investor, as most of you at home don't have the time to do so, gold makes sense. It's simple. You buy it, you keep it, and you're going to make some money on it.
There's no PE, there's no PB, there's no profit loss.
Recession, who cares? Who cares? Who gives a damn?
That's why gold has always been the best investment class for people who are very poor, who are especially don't have exposure or lack of education. They hold on to gold because they know, I don't know anything else. This I've known from generation to generation. They've seen their ancestors doing this, so they just believe it blindly.
And we at Be Rich believe in simplifying what you do in terms of investing. And this is the simplest it can get. It's to buy and hold. And even when it comes to S&P 500 indexing or Nifty 50 indexing, the reason why we talk so much about it is because we're looking for strategies where we're trying to reduce the amount of computations you have to do. Because if you reduce the amount of steps you have to take to think and the mental gymnastics which you have to do, the less likely you're going to make a huge mistake which is going to cost you a lot of money. And
this lowers your risk. Being invested in gold.
Like Warren Buffett said, the first rule of investing is to not lose money. The second rule is don't forget rule number 1. So this is the point. Okay, we talked about gold being simple. Fourth point, why do you think, Shashwat and Vinod, that we need to hold gold? Fourth point is the fact that it's so easy to raise money when you have gold. Most of us at home, I know my other uncle talks about never borrowing, and he's right. You shouldn't have a credit card. You shouldn't borrow. There may come a time when you do have to borrow for emergency funds.
Yes.
And when that, God forbid, that moment comes to you and you have 10% of your portfolio in gold, you can take a gold loan against it and close it off later when you need to. And gold is going to be that one asset which needs
easiest to take loan.
The verification steps are very low. You might have seen many gold ads saying that you come in within an hour, they'll process your papers and give you the loan. This is the simplest way to raise money. And especially if you have to go to another country, suppose due to any turmoil
national
or
calamity,
any national calamity, gold is going to be your best friend because you can take this and you can raise money wherever you need to go.
You've seen wars after wars.
Yes.
Refugees carrying gold and gold.
This isn't, then immediately the comments are going to say this is some doomsday prediction. It's not. But we believe in being prepared for anything and everything life has to throw at us.
Yes, because the reason we are not doomsday preppers is we're not saying keep all your money as gold.
Yeah.
We're only recommending that to keep
a
5%.
small amount.
Yeah, small percentage.
Yeah.
Which is 5% should be more than sufficed.
Yeah.
So, yes, gold is wonderful. Gold is beautiful. Everything what Shashwat said is true. But in moderation. Going to the extreme and suddenly selling everything and buying just gold, then what Warren says holds very true. you're not really making money at that point of time.
Right. And let's come to the last point. The documentation which surrounds gold and its capital appreciation and all the surrounding taxation policies are much easier to navigate, in my opinion. And I hope you have something to say about that as well. Then, let's say stocks or real estate or any other.
Well, in India.
In India, yeah.
Yeah, in India, yes. Especially after the last budget, all asset classes have been slapped now with. So, yes, it is simple. Taxation, when it comes to gold, buying and selling, or the taxation on it is very crystal clear. There's no confusion in it. So it's easy that way, yes. But my thing would be, whatever you invest in, try and stay invested as long as you can. Try off putting that gratification as long as you can.
Yeah, and that's an important point, which we plan to make another part 2 to this on 5 reasons why you should maybe look at something other than gold. And in that, we're going to be talking about this very point. If you cannot hold gold for, let's say, 10 years or 20 years, then I'm sorry to tell you that you're going to have a lot of price fluctuations and it's going to hit you very badly. Because if you look at the fluctuations of gold in the past 20 years from 1997, more than 20 years, 1997 is almost 26 years. So if you look at the price fluctuations of gold from 1997, that's the year my sister was born, you would have seen gold at different points. You would have seen gold climb by almost 400%, come down by 200%, go up again by another 200%. What this means to tell you is that, like he said, if you cannot stay invested in gold for a long period of time, then this entire video is moot, because the point of gold is not to make a quick buck on a trade. It's a long-term hedge which you're going to keep in your portfolio, which is going to add to your returns during bad times and give you a decent return during good times. Maybe not so much, but it's going to be there, and it's going to be there.
This is the same reason why crypto is also performing so well, because majority of the crypto is not being sold and traded. It's being held.
Yeah.
Someone in the world is holding 80% of crypto and it's not floating around in a free float. If that started happening, the imagined world where crypto is being used as currency and people are buying and selling using crypto as currency, then if someone holding 80% of it, it will not work.
It won't.
Yeah.
And it's as simple as that. And we hope you watch the second part to this video where we discuss 5 reasons why you may not choose to invest in gold. And it's going to be informative. And we also would like to tell you that none of this is investment advice. We're just discussing these points as
We're bouncing ideas. And if you something that inspires you to research further, please do research further.
Yeah. So that being said, thank you for watching this video. If you liked it, please hit the like button. Please subscribe if you haven't subscribed already, and hit the bell icon to get notified for when we upload our latest video. Finally, if you have any opinions or comments on gold or otherwise which you'd like to express, please leave them in the comment section below. We do make it a point to read your comments. Thank you once again for watching. Be rich.
Thank you.
I told you about visiting Singapore. The date has been finalized. It's 25th August. It's a Sunday. Those desirous of meeting me in Singapore can drop a message to the WhatsApp number given below, or contact my team by an email. My team would reach out to you and we will assure you of our best services. For English and Hindi, there will be a separate meeting. See you in Singapore. It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.